You beat on the quarter, but it's the outlook that investors are concerned about. What's your reaction to this pretty big drop in the stock?
Well, let's first just talk quickly about the quarter because I think it's important. Revenue for the quarter was just over 130 billion, 1.38 billion. That's up 41%. GMV was 54 billion, up 31%. If you look at the year, though, revenue was 4.6 billion, which is 57% over 2020. GMV was 175 billion, up 47%. So I think what you are seeing is that, the merchants on Shopify, we have millions of them, have proven their resilience and that e-commerce is doing really, really well. Our merchant base has doubled since 2019, and annual revenue, 2021 annual revenue, was nearly triple what it was just before the pandemic in 2019 as well. So I think what we are, certainly I think the Q4 earnings and the full year results show that modern retail and e-commerce are doing really well. And if people remember that Shopify's business model is really this virtuous cycle of entrepreneurship. We do well when our merchants do well, and then we can reinvest back in them. And so we're excited by how, as we come out of the quarter, and we're excited about the year ahead.
So look, clearly shoppers are there. It's happening. The question is growth. You're talking about inflation impacting consumer habits. There's concern about people coming out of lockdowns, going back into stores physically. How are you modeling this out, and how much growth do you actually see ahead, especially after this COVID bump?
Well, here's what makes me optimistic. First of all, if you look at business applications, just one single metric. Business applications, we had 1 million more business applications filed in the US in 2021 versus 2020. It was 5.4 million compared to 4.4 million. Now, in terms of even things like e-commerce growth, remember, e-commerce is expected to hit about 4.9 trillion for 2021 and grow to 7 trillion by 2025. Then, as your colleague just mentioned, in terms of retail, retail spend in January was reported up 3.8% after being down almost 2% in December. And so we are seeing, which is the highest since last March. And so I think there's a lot to be optimistic about. But more generally, I think 2021, Q1 in particular, you had lockdowns, you had government stimulus. We're now getting back to a point of some normalization, but the normalization is on a much larger base. And I actually think, when I look across our merchant base, they're going to do very well. And consumers are shifting their buying preferences to buy from these independent brands and away from big box retail.
But what about inflation? How do you think that will impact the consumer? And that's something that you don't have control over.
That's right. Look, we don't have control over inflation, but we do monitor it. And one thing we do know is that whether it's a pandemic or it's supply chain issues, the merchants on Shopify are resilient. These are your favorite brands. When you are buying something on the internet and it's an amazing experience and it's not on a big marketplace, it is likely powered by Shopify. So we can't control inflation, but we do see resilience. What we can do, however, is we can make starting and scaling a business way easier. So whether it's Shopify Capital, which is now given a $3 billion worth of cash advances and loans, or it's the fulfillment network, or it's Shopify Balance for cash management, by reducing all the barriers to success, we can make it easier to succeed despite whether it's inflation or supply chain. And that's what's important.
So let's talk about that, because a lot of investors are concerned about fulfillment centers and that report that you had cut some contracts with some of your partners. What's happening there? Are you preparing for lower capacity, or are you building out your own?
Yeah. So Shopify's entire goal is to make the important things simple and everything else possible. And fulfillment needs to work really well. And so we are moving out of the prototype phase of the fulfillment network, moving into what we call the build phase. So we're going to be operating more of these warehouses ourselves. We're going to unify it through a warehouse management system, which we design. But the goal is for us to achieve 2-day delivery coverage for more than 90% of the US population. And now that we've had 2 years worth of data and insight, we think we know exactly what we need to get there. But again, whether it's fulfillment or it's capital, what we're trying to do is make it so that merchants don't have to think about these things. And so we are changing the way we look at fulfillment generally, but it's not a massive change. It's simply just optimizing based on these learnings over the last 2 years.